One of the things that clearly makes One Rental at a Time YouTube channel different is it's not all me. In fact, it's very little when you look at the totality of the content created. We rely on experts from around the country, and we are so lucky to have Beth Traverso, who is a top 1% agent in the country, come to us every Tuesday to talk about what's going on in King County. And today she has a treat. She has gone back and collected data from 2019 to today. I think we should look at this very, very important. Why? Because 2019 was a normal year. And at some point, all markets will go back to a normal year. But let's see what we're doing. Let's welcome Beth to the show. How you doing, Beth?
Hey, Mike, doing great. Thanks so much for having me back. Always a highlight of my week to be here with you and everybody. So thank you.
Yeah, and the audience loves you. You bring real,
Thanks.
no nonsense approach. And again, you're willing to do homework, which is something I don't
For
do very
you,
often.
Michael, anything. So yes.
Oh, that is so awesome. So Beth, why don't you set up kind of what we
Yeah,
talked about last week, what you went and got for us, and then let's bring
right.
it up. I have not seen these because I want the honest reaction when it
It's
comes
just
up.
going to be what it is. We'll look at it together. And so, first of all, I need to say the data I pulled was from the Northwest Multiple Listing Service. And they let me share their charts and graphs with credit that they deserve. So,
Mhm.
and I'm in the Seattle market. So, greater Seattle, we call it King County, which has many submarkets, but we're looking at the overall totality of what's been going on in King County, which is about 2 million people or so. So, it's a major metropolitan area. Um, and I know that, we like charts and graphs and numbers here. So I figured we'd look at some charts and see what's been going on. And like you're saying, 2019 was, yeah, that was before COVID hit and changed everything for years. So we can kind of look at what's happening then versus what's happening now, what happened in between, and look for patterns and see
Yeah,
what we can expect.
yeah. I mean, King
Yeah.
County is a massive market. I would say median price is clearly above normal for the country.
It's about
Um,
800,000, but that's one of
yeah,
the charts I have, as you can see, where that's changed quite a bit. So, the other what we talked about last week was how the inventory is very, very, very low. And you were wondering, has it ever been that low in previous years? And
right.
so that's what this is going to show us. So we'll take a look at
Okay.
that
All
here.
right.
Let me
Let's
share.
dig in. This
Let's
should be
try
fun.
this here. Hopefully this works. So, can you all see this?
We can. Thank you
Okay.
very much.
So this here is the number of homes for sale versus sold. And so the active listings is the red, and then it's overlaid with the sales in green. And so you can see here down at the bottom where it talks about the different years, it says 2019 was actually, there was more active listings at that time. That was when rates bumped up a little bit again, and the market did slow down a bit around that
Right.
time. I mean, rates were high, at like they broke 5%, and I remember that made everything just slow down significantly around that time. I think, if my memory serves me right, rates were maybe 5.5 or so for a while there, and I do remember the market hit the brakes and inventory started going up. You can see that there, and then when the pandemic happened, everything just fell off a cliff. You can see that over
Yeah.
here. And then
Yeah.
look at here, you can see the red here behind the green. So you can see in 2021, 2022, how the active listings was very close to, as close to
Yeah.
zero as I've ever seen. But then the
That's
sales were
crazy.
still surging. So that just ate up all the inventory. And that's when the prices spiked. Rates were so low. And then you can see, last year things bumped up again, but now we're
Yep.
coming back down. And there is always this up and down. So there's the seasonality of it, right? But then,
Yeah.
looking at what we have now for inventory versus where we were, it's like, normally this is where we start to see inventory start to bump up a little bit, and we're not really seeing that.
Yeah. So there's a couple of, so can you go back to that? Because
Yeah,
again, when
yeah,
I look at that, one of the things that you taught me, right? You're the first one to bring this to me, and I now translate it to the rest of the country, is we're going to have four negative median home prices year on year numbers. And we got our first one today for
yeah.
February. It will be February, March, April, and May. And you actually have it on this chart. If you look at
Mhm.
January 2022, you see the spike up in green
Yep.
coming from a very low base. You're the one
Mm-hmm.
that told this channel. People can go back and look at your playlist. You had it. The one painful example was 500K over asking, EMD release,
Oh, I
No,
know.
no, I mean, that's unhealthy, but that's how you get crazy, stupid prices that we're going to have 4 months of negative year on year. We got to
Oh
pay for
yeah.
the sin of stupidity.
Yeah, and just wait for those, those we saw that coming months in advance, and it's happening now, and it's going to
Yeah.
continue on. When we're looking at our data last week, what I've been seeing in my area of like the east side of King County, which is a little more high end homes, is that the median price has been actually pretty steady for the last 4 months or so, but year on year it looks like a disaster. So
Right.
because it's 20, the east side is 20% down median
Yeah.
price versus, because it wasn't the bidding wars that were pushing at 20 to 30% over, not happening
And
now.
then the other thing that I see on this chart was, again, people can go back and watch our July interviews. July 2022 was the first time rates got over 6, if people remember.
Mm-hmm.
And you told me, I think your exact word is, Michael, it's a ghost town. It might have been, it's a
Mm-hmm.
crickets, but things
Yeah.
stopped. Because
Mm-hmm.
again, people were so seasoned to 3. The first time we got to 6, everything stopped, and your chart shows it pretty clearly. So, and then, oh,
Yeah.
by the way, look at where we are now, right? We've got demand rising and listings falling. And this is not supposed to happen in your market. You've told us this is when listings are supposed to come. Where
This
are
is
they,
prime
Beth? Where are
time.
the
We're
listings?
already past where our listing surge should be well underway, and everyone's just sitting back, twiddling their thumbs, waiting for it to happen.
They're just going to stay put. People are not selling. I keep telling people it's not coming. But all right. So that's chart number 1. Thank you.
Yeah. So let me scroll down here. This one here, days to sell, median days on market.
So this is days on market, DOM, if
Days
you
on
look on
market,
other.
DOM, for people that want to learn the lingo. DOM, days on market. So we can see, back in the summertime and in the fall, look, it spiked up close to 34 days or so.
Yep.
And then now it's fallen back down to where 20 days right now.
You were single digits for a freaking year.
Oh, I know. Look at that. And the only reason why there was 5 days on the market was because agents were holding offers for 5 days.
Yeah, they were doing offer review.
It would have sold in half an hour if somebody would allow it to, and some did, but a lot were like me, were holding the line for a review date to see how high we could get it to go.
So July of 22, it spiked again. What happened in the mortgage market? That's where rates went over 6. Then, then you had the Q4 slowdown. That's the December spike. And then what is it now? It's the days on market. It's come down by 50%. Well, I don't know, 40%.
Yeah.
That's wild.
And I'm still seeing this, the bifurcation where so listings are either selling in 5 days or less, or they're selling for more like the 20 to 30 days. It seems like it's one or the other.
Now, that's interesting, but I'm going to push back, or at least dig in a little bit. I propose, and again, no idea about King County, so this could be clearly wrong. Whatever the median price is, I think you said it was 800. My guess is below 800 is selling faster than above 800. Just a wild ass guess.
It's circumstance dependent. So I'm seeing even some luxury homes, if they have the it factor, if it's waterfront, has a view, beautiful.
Right. So if it's a diamond, right? If it's the top 1% of list, okay, fine. All right.
Those are still selling, usually cash.
But not the track home, $2 million. The
subdivision homes are struggling. They have to really be priced spot on, and it always, the listing agent and the seller really got to know what they're doing to move that the way it needs to be marketed right now. Yeah.
So the end of this is we have seen higher days on market. 2019 was a normal market.
But even look how much higher it was in the beginning of 2019, and then how that just
But even here, I mean, what I just realized is I thought that spike down was heading into the pandemic. It wasn't. That was heading down into the summer of 19. The summer of 19, you were sub 10 days. That's wild.
You remember better. I'm just going off my memory, and we all know how that can be, but at least I do. But
fuzzy. Yeah.
A little fuzzy, but I seem to remember, I think rates improved a little bit, and then it came back around that time, because usually summer is kind of a slower time for us here. When the weather gets nice in the Pacific Northwest, people just go outside and they just forget about house hunting for a while.
So the other thing I will take for this, again, January of 20 was still pre-pandemic. January is your highest days on market, and then the market goes nuts. That's what this chart says clearly. All right.
Yeah. And then you'll see a little bit in the summertime, it slows down a little, and then kind of see a little bit of bump there.
Yeah, I
Not
guess.
much. It's still sub 10, you know.
Yeah,
But yeah,
wow.
we had several years of not normal market. And a
Yeah.
lot of agents and buyers and just people in general that weren't in the housing market or paying attention to it before then, you might get accustomed. It's easy to get accustomed to thinking things are going to be a certain way.
Yeah.
Where even when things are balanced, you feel like this is a bad market. It's like, no, it's
Yeah.
balanced.
Yeah. Yeah.
So
Yeah. If you got in the business in the last 2 years, it's going to be hard for you to realize that they were not normal, even though they're normal to you.
yeah, and for agents, I say, you know, we've talked about this in other videos where it's just you need to sharpen your tools and get better skills, and you need to be a better advisor, you know, because the houses don't just sell themselves. So, this next one here, this is the median home price, which everyone loves to pay a lot of attention to, and you can see it peaked out about a million last spring. Look at that surge there. That's what I was talking about.
Yeah,
Where
that was
everything just
this
spiked
this
up.
is why, yeah, we're gonna have 4 months of negative year on year because most markets across the country got stupid for 4 months.
We're crossing this right now, this area. I don't know if you can see my cursor, but it's like right in there.
Okay.
We're crossing below that. We're crossing through that spike.
Yep.
So even though right now we're pretty close to where we were about a year ago, just about.
It is pretty interesting that January through like March, just as you told us, that's when you see your run up.
Yeah, the buyers are
spring selling
ready. The
season.
sellers aren't out there, and something good comes on the market, people jump on it. Bidding war ensues, and new price levels are achieved, and the bars gets reset higher.
That's wild.
And then it tends to back off a little bit over the summer when everyone goes on vacation. That's what the chart shows. Yep. Yeah. So, and now, now we can see, you see that we're back around the 800. So, but I mean, could somebody call that a crash?
Absolutely.
I mean, maybe
20%
for a little while.
crash.
Yeah, but it's like 20% down, more or less.
Yeah.
And, you know, so, okay.
Yeah, it is. It's okay. It happens.
It is what it is.
Yep.
And then here's the months of inventory. So look at this down here.
That's wild.
That was about December of 2021 or so.
Yep.
As close to nothing for sale as possible. And then you can see how it just blew up. And, you know, looking back, I looked back as far as I could, 10 plus years on this chart, by the way. And just so you know, like it never got lower than this trough right down here.
I can't. I mean, I can't imagine.
How could it? Yeah. How could it? I don't think I'll ever see it lower than that.
That's like, that's 0.25, 0.3.
Yeah. I remember for a while there was like 5 days of inventory. And this is across all of King County. So we're talking high end, low end, mansions, entry-level homes, everything.
What else do we learn? So January historically is kind of the high. Again, looking at the chart over 3 years, then it comes down precipitously into the summer. Then you get kind of a bounce.
Yeah.
So basically,
a little bit of a bounce happens in the fall when people are back to business for a little bit, and then it just goes dormant for the holidays. Yeah. And then the cycle repeats. You know, the inventory dwindles. And then the surge happens. This year is different though. I mean, because if you said like the demand is down, but then the supply is also dramatically down too. So,
but again, this points out why last year was so hot. I mean, there was just nothing there. It doesn't take much demand to absorb 0.2 months of supply.
No, and they throw some 3% interest rates in there, and people
go bananas.
Money that people had at the time. Everyone was feeling rich and had the low rates and wanted to buy a house, and there's nothing to buy. And it's interesting how the crowd psychology kind of works together, where when the crowd decides that it's game on and we're going to compete, they will like fight to the death, it seems like, you know. And then as soon as it cools off, it's almost like the watering hole or whatever, you know, like something happens at the watering hole and all the animals leave, you know. It's kind of, it feels like almost like that. And I don't want to oversimplify like that, but it is like a group psychology thing.
Certainly.
So when people are feeling like others around them are being more reticent or hesitant, then they're going to do that too. Like, why would I want to jump in with both feet if other people are waiting? Why would I do that? And typically what I find that changes that is like if somebody loses a house or 2 or 3 to a bidding war, then all of a sudden they're like, oh, we got to do this now. So, and right now what I'm seeing is a little more hesitancy back in the market. So, but there's nothing.
We will talk about that in video number 2.
We will. And here's the new listings, because we've been looking at new listings.
Yeah, this
That
is the
tells us
wild
what we
one
have
for
to look
me.
forward to.
Yeah.
And look at this here, how instead of it spiking up like these other years, where it just went up, 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 it just kind of took a right
Yeah,
hand
this
turn
this
right
will be
there.
very interesting because this is, I've been saying the housing market is broken. It's gonna be years of below average. This is the chart that if we were to get in a time machine and jump forward 3 years, I think it's going to be remarkably below trend as people stay in their housing longer. We've just broken the natural cycle. It's going to take multiple
Mm-hmm.
life events for people to get rid of that 3% mortgage, and many of them will just turn them into
I
rentals.
know. It'll be interesting to see how long that will go before that breaks that
This
trend.
is the first spring selling season, and unfortunately, my belief is we will have 3 or 4 more of these below trend on new listings for years to come.
Mm-hmm. Yeah, I agree with that. Let's see. I think we have one more here. List price to
Oh,
sale
look
price
at that.
ratio.
Oh, look, that is why we have 4 months of negative numbers. The
I know.
average was
Hello, people. This is not supposed to be
112%.
like this. Yeah.
That is dumb.
Yeah, and actually this almost seems tame because I swear if we broke it into submarkets, because I know when I was coaching buyers back a year ago, it was 20 to 30% over list or no go.
That's crazy.
So,
That
and this is
that
actually
is
kind of on the
not
calmer
healthy.
side of things. I know, and we're not even talking underpriced deliberately. We're talking priced according to recent comparables from a few months ago. You need to go 20 to 30% over, or you're not going to get the house because there's 40 other people that want it and they've all throwing money. So, yeah, that's what was happening. And yeah,
This
we're going to
is
be
the
negative
chart.
year over year on that. And I don't think
Yeah.
that's a bad thing.
No, we should be. That's crazy. That's
Mm-hmm.
not normal. We
Non
did that
normal.
because you had 0.3 months of supply. Mortgage rates were 3%. Everybody wanted one. It was go time. And again, we're going to have 4 months of negative numbers because of that number right there. You should
Yeah.
never have an average of 112% of list price. Let me be clear. That is not normal and not healthy. Wild to look at.
No, and so this is it, and this is not data that's spun any particular way. This is just the raw data from the Northwest Multiple Listing Service. So just showing what it is. So yeah, that's the story of what we're looking at right now, and just kind of a little bit of like a peek back in time. But you can see when 2019 it was around 100 or so percent and a little over. Now we're kind of back to that. So I'm not seeing things selling for way under list. But one thing I want to say about this chart that people need to keep in mind is this is going off of the list price when it went under contract. It does not count price
Oh, it
drops that
doesn't count price
happened.
drops. Oh,
And
that's
there's
okay.
no way, I don't know any way to collect that data. Maybe the MLS has some way they could do it, but I don't
Super
have any way
secret.
to
Yeah.
collect that data
Yeah.
but I would be willing to bet it probably is that would change things
Oh,
because
for
a lot
sure.
of houses are doing price drops before they go under market. And then when they get in my market, when they get to the price where they're close to where they should be, that's when the buyers jump in and they come in sort of close to that price, a little under, and then we work something out. But there could be 1 or 2 or sometimes even 3 price drops before it gets to that point. So that's but obviously when it was selling over list price, that wasn't happening. It was more like, okay, we're listed for $1 million. All right, we'll take the offer for 1,150 with no contingencies. So that's what was happening when it was selling for over list price. So
Yeah.
but you
Well,
can
this
see
is
this
awesome.
chart,
This is the
doesn't
chart.
go.
This is the one. Yep.
Yeah. And you can see like this doesn't, as far as crash or whatever, like it's not going well. It's not, the bottom of this chart is 96%. So it doesn't go to like 80%. And we're seeing things selling for, 80% of list price. Not to say that those deals aren't out there. I've found them. You've found them. You just got to know how to look. Right. So
yeah, just write lots of offers, do the work, look for the problems. I got 2 deals in 3 weeks at 30% under list.
yeah,
So
I've done
it
it
can
too.
happen.
And it can happen. You just got to know what to look for. And that's part of doing the work and checking your buy box. Because if it's a hot, new, shiny listing that everyone wants, like just steer clear of that. Don't even, I wouldn't even pursue that if you're looking for something that's, if you want to get the best price and the best possible return. So
yeah,
be mindful.
Well, this chart does it for me. This is the one.
Yeah.
If you want to know why February prices are down, you want to know why March is down, it's because people are willing to pay 112. And again, folks, I want to hit this. This is the average.
Mm-hmm. It's
That
not an
means somebody
isolated
went, oh,
house
no,
here or there. Yeah.
this is the average transaction. In January and February of 2022, the average transaction was 112%. That is bananas.
Never seen it higher on the average for King County.
I hope you never see it again.
I know. I'm telling you, people that said, oh, it must be a great time to be a real estate agent. It was exhausting. So, I mean, especially if you're working with a buyer, because I make one more point about this. So when you're working as a buyer, every week you had to pick which house you were going to go all out on, and you went to battle and you lost again and again and again and again. And eventually you got a house. And then the inventory was really, really low too. Why? If you could sell for that much, why was the inventory so low? Because sellers have to buy two the majority of the time, and they didn't want to get stuck in that where they were left without a house and they couldn't buy another one.
Exactly. Move up buyers. So, yeah.
That's why part of that dynamic is like, well, and we know we can sell our house for a lot, but then we got to go buy one too.
Yeah. And well, you've just unlocked the reason for everybody across the country to realize why February, March, April, and May will be negative year-on-year numbers because buyers got stupid. I don't know what else
they did, and now we're just we're working through it, untangling that knot, and we'll all be fine.
Yep. Beth, if somebody wanted to buy or sell in King County, you are the best of the best, or they wanted to network with you, how should they do that?
Yeah, so I'm easy to find, BethTraversogroup.com. And if somebody would like to get partnered up with somebody great across the nation, I've got a great network too. So feel free to reach out. Happy to chat with anybody.
There you go. Thank you so much.